Take-Two Interactive announced their earnings yesterday, and Mr. Market really didn't like the results. You could see the stock is down 18% today and even down nearly 50% from its all-time high. So we're going to take a look at the earnings report, see if there's things we like or we don't like, and then try to value the stock based on the free cash flow of the company. You could see that Take-Two Interactive, they publish on nearly every platform. Everybody knows Rockstar Games from GTA. Probably a lot of people know 2K Games. They have a private division and they recently acquired Zynga, which is only active in the mobile segment. The company really focuses on creating high quality games. In the past year, they made some mistakes, but in general, I think that the company really creates world-class games, and you can see that they really care about quality. They have a big portfolio with a lot of names that you probably know, but they somehow depend on GTA Online. And you can see that they significantly expanded their staff headcount. It's up nearly 20% from last year, which we will probably also see in the operating expenditures. A lot of people don't know that the mobile market is way bigger than the PC market, and that's why they expanded in this area, because there's obviously a lot of potential and a lot of money to be made. That's why I personally like the Zynga acquisition. But also, both of the companies fit together because Zynga's games have very good reviews, which is something that's also true for Take-Two's games. Now we can see the gaming market, although we had very strong years with what happened in the past years, but it's still a very young market, 31 years old. Compounded annual growth rate until 2024 is 4%, so it's still expected to grow. So here they just talk a little bit about their games. I think we can skip this part and get right to the financials. So now we can see that the net bookings this year are a little bit below 2021, but overall we have a compounded annual growth rate of 14%. And what the company really cares about, that's also some explanation why they acquired Zynga, is the recurrent consumer spending, and we can see that the compounded annual growth rate for this is 21%. So they have reoccurring revenues and aren't as dependent upon new releases of games, which is something that I like to see. We can also see most of the money is made on console. Most of the net bookings come from the consoles, but I expect mobile to keep growing and get into the 30% range. As I already told you, I expect operational expenditures and capital expenditures to grow. We can see they more than doubled the capital expenditures, and the unrestricted operating cash flow went down a little bit. Now that we've gotten a little overview over the company's quarter and what happened, let's get really into the financials. We can see the guidance has been $1.37 to $1.42, and the net revenue has been $1.394. So really in between the guidance. Operating expenses have been above the guidance, which is somewhat surprising to me that their guidance has been too low, because operating expenses is something that you can really plan as a company. The net income has also been below guidance, which also isn't very good, especially that they haven't been able to be profitable. Net bookings at the lower end of the guidance. We can also see that they lowered their guidance for the fiscal year 2023. With net revenue, they lowered their guidance. They also increased their operating expenses, and therefore they also increased their net loss at guidance, which is something that really isn't that good. We can see that the net cash from operating activities is down. They operated at a loss, but the EBITDA is up, which is something that I like to see. So overall, I have to say that I really don't like the quarterly earnings Take-Two just reported. And I think that the huge drop in the stock price may not be 100% justified, but I definitely understand why the stock price dropped. And I even understand that the stock price dropped very dramatically. In the next video, I'm going to make an analysis of Take-Two based on the free cash flow of the company. Just check out the pinned comment below to get to that video.